Good morning and welcome to the SERINUS Energy PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. It can be submitted anytime via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Andrew Fairclough, CFO, Stuart Morrison, COO, and Calvin Brackman, VP of External Relations and Strategy. Good morning to you all.
Good morning. Thank you very much. Good morning, everybody. Thank you very much for joining us for our annual results for the year ended 2021. Firstly, I will just offer apologies from Jeffrey Auld, the CEO. He had knee surgery at the end of last week, which was a long-standing injury that he had the opportunity to get in and get sorted. So he apologizes for not being able to make this. But with that, I'll move into the presentation. We'll talk through the slides and then take questions at the end. So moving into the highlights, we had a good outturn for the year, revenue of just over $40 million. We generated net income of $8.4 million, the first time the business has ever generated net income. We had a busy year. We drilled 2 wells in Romania. We installed 2 compressors onto 2 of the wells in the Moftina plant. We did workovers and pump installations in Tunisia, and we really got ourselves into the start of the artificial lift project in Tunisia. Production was just over 1,600 barrels of oil equivalent per day. That's Romania, just over 1,000 barrels, and Tunisia, just under 600 barrels. From a financial highlights perspective, just in case I didn't mention the $8.4 million of net income, which we are very pleased about. This as a signal for the position that we've put the company in. Operating netbacks are very strong. That's based on, we had good commodity pricing through the year. Realized oil price of just over $65 per barrel, with a gas price of just over $11 per MCF. The pricing we're seeing now remains very resilient. Brent this morning, when I looked, was $110 per barrel. And gas pricing, we are seeing in the sort of $30 to $40 per MCF range in the opening months of this year. CapEx, just under $11 million. Predominantly that was spent in Romania on the 2 wells and the compression projects. And we did a couple of workovers in Tunisia and started ordering all of the long lead items for artificial lift. EBITDA for the year to $12.3 million. And we closed the year with $8.4 million of cash, again demonstrating the cash generation within the business, and also the benefits and impact of having cleaned up the balance sheet so we have no debt. We'll sort of mention the current situation in Ukraine. Clearly, it will inevitably have an impact, we believe, on national mindsets in regards to the sourcing of oil and gas. And particularly as we can all see the heavy reliance that a number of countries have had on Russian supplies. European diversification is already beginning to become evident. We think, we have in Romania, we have a very sizable acreage. We have a lot of opportunities. And Romania imports gas from Russia. And, we see ourselves as a part of domestic production to reduce that reliance. And I think that positions ourselves well. We are keen to invest, and we've demonstrated our ability to deliver and deploy capital effectively in the country. And similarly, Tunisia, we've got a number of programs which we'll talk on later. But again, we have the capital that we are deploying into Tunisia is all designed to increase production there. A snapshot of the revenue profile and cost of sales. Increase in revenue is translating now into our cost base. We've generated gross profit of $7.2 million. Again, as I said, $8.4 million of net income. Cost of sales, I think the notable elements there, you can see at the top of the bar, the impact of the windfall tax and how that has decreased over the last comparative period. Depreciation has reduced. I mean, that is as a result of a lower depletable base and lower production through the year as our Romanian production tails off, as we've highlighted a number of times. But I think, again, it demonstrates the resilience of the business and the steps we've taken to make it efficient and profitable. Production volumes, as I mentioned. So the work we've been doing in Tunisia has very much stabilized and is beginning to increase production slowly. In Romania, we repeatedly point out these are shallow gas fields. They do decline, and we are managing that. We have put 2 compressors now into the Moftino gas plant at the end of last year. We are monitoring. There is a sort of bedding in phase where we sort of adjust the settings, for want of a better word, and we will analyze that and determine the impact. I mean, we are seeing a stabilization as a result of having put those in place. Average realized pricing. I think this doesn't reflect, especially in Romania, it doesn't really reflect the strength of pricing that we've been seeing at the back end of last year into the first few months of this year. And we would expect that to start being reflected in our first quarter results. On a production basis, our total production expenses slightly increased over last year. That was really to do with the fact that we did some additional workovers in Tunisia. We have 4 wells now in production in Romania, so there's associated additional uplift and expenses in that. We had, and we've flagged this through the various results last year, a historic mining tax in Tunisia. That was some historic taxes that we cleared out, which gave us a bit of a larger impact than we would normally see. Operating netbacks, as I mentioned before, group operating netback at just under $45 per BOE, very much the reflection of the commodity pricing that we're seeing. On a capex perspective, reflects very much the fact that we're now in a position to invest in our business. The fact that we were able to clear out the EBRD debt at the end of 2020 really removed what was going to be an $8.5 million interest payment last year and allowed us to deploy capital into our business. Exactly what we should be doing, and that's translating into strong funds from operations and strong cash flow. I mean, funds from operations just over $10 million with EBITDA of just over $12 million. Just thought it was worth sort of looking back in time a little bit to see where this business has come from. It feels sometimes that this is overlooked, and all the hard work that has been put into repositioning the business and stabilizing it and positioning it now for I think an exciting phase going forward. The production base has been redefined, and we have a good stable production base and lots of opportunities in Romania and Tunisia. Our revenue is strong. The G&A base has been completely repositioned. Costs were going backwards in time, were slashed dramatically, and now we have an appropriate cost base that reflects where we are and what our ambitions are. That translates clearly into our cash generation, and in turn, looking at net income generated for the first time in the company's history, and again, a very significant change in the balance sheet of the business, having moved from a long, consistent period of net debt into a business with $8.5 million of cash at the year end. And I think it is an achievement, and it does position ourselves very well for the capital that we want to invest in the business going forward. I won't really talk to this. There's a little bit of additional detail. It just allows me to remind everybody again about the cash generation in the business and EBITDA of just under $12.5 million. Looking forward, We are very much focused on Romania and Tunisia. We have large acreage in the Satu concession in Romania, and a very large oil field in Sabria, which has 445 million barrels of oil equivalent in it, and a very low production rate of 1%, just over 1%. And so we are taking steps to capitalize on both of those. We completed a 2D seismic acquisition program last month, and we're now in the process of analyzing that information to de-risk these prospects. And we essentially are looking at starting an exploration drilling campaign in the latter half of this year, once we've actually completed the assessment of that seismic. In Sabria, we are now in a place where we are very close to starting the artificial lift program there. The pump arrived in Tunisia at the beginning of this month. We have long lead items in place, and our one remaining element is awaiting the rig, which is currently with OMV on doing a workover program there. So once they have released the rig, we will receive it and be able to mobilize that we expect in the next quarter. So we think that we have a strong cash generating business that is now directing our capital into our opportunities. It's a very exciting phase. It's exploration in Romania, and it's a very considered development enhancement program in Tunisia, both designed to increase our production for the longer term. Clearly, in today's world, ESG as a closing slide. We're very proud of our ESG record. We have monitored and been audited by third parties for over a decade. So it's always been a very core part of how the business has been operated and managed. We have a very good track record on health and safety. No lost time incidents in Tunisia for over 2,000 days. I mean, it's quite an outstanding output. And similarly for Romania, we passed over 1,000 days earlier this year of no lost time incidents. Romania is a very modern new plant, and therefore it is efficient, minimizing fugitive emissions. As an aside, we've been installing solar panels in Romania. We think we have more area and space we can do that. It would be good to increase the non-grid generation of electricity through solar panels, and we similarly look at that in our Tunisia operations as well. So with that, I think that really concludes the slide deck for our presentation. But I think what we've got is we've worked very hard to reposition the business in a place where we have now the ability to invest significant sums of money to deliver nearer term production enhancement in Tunisia and the start of new opportunities in Romania within our acreage. So we think this is a very important year for the company, as is every year. But I think we're in a very good place to deliver that and pursue our ambitions.
Andrew, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted today already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Andrew, as you can see, we had a number of questions submitted today, and we had a number of pre-submitted questions as well. And thank you to all the investors for submitting those. If I may, Andrew, just ask you to click on that Q&A tab, start at the top, and just read out the question and give your response where appropriate, please.
Thanks, Paul. Okay, so I'll run through some questions. Okay, on the 4th of March, I submitted a question through the company website about the Q4 trading update. I have not received any kind of response. If you have such lack of respect for shareholders, you do not respond. Queries, why should they invest? Well, look, first thing, I can only apologize. We've checked our website. We didn't actually receive the question. So if you want to put it through here on the Q&A, you're very welcome to, and we'll see if we can answer it. So apologies for that, but I'm not sure really what happened there. Next question. Even before the recent gas and oil price spikes, SERINUS current and potential investors were repeatedly reassured by directors that the UK market significantly undervalues the business. The company is authorised to repurchase shares representing 10% of issued share capital, but so far only managed to purchase less than 1.5%. What lies behind such slow progress in the buyback process? It's very simple. We initiated the buyback. We look at buying shares where we think it delivers the appropriate return, and this is a decision based against all the other investments we make in the business. It's about capital allocation. There are also sort of reasons why you have certain parameters within which you can trade, and sometimes we do a trade, the share price moves outside the parameters within which we're authorized to trade, so that then slows down the progression. We also moved into our close period, so there is a period of time where we cannot buy shares when we're in a close period. So that is really the sum and total of it. I think what we do also look at, though, is we've had a very good progression in our shareholder base. The EBRD came out of their position. We have some very good and supportive shareholders. Crux Asset Management took a large stake following the EBRD's exit. And I think we are positioning ourselves as best we can to capitalize on any ongoing weaknesses. But again, we make that decision in terms of all of the investments we look across the board and the returns we think that delivers to shareholders in the wider market. Question 3. Experience and knowledge directors and business potential seem to go unnoticed by the UK market in contrast with Warsaw. Wouldn't the option of increasing PR around AIM listing or delisting be better in the long term, since the differences in market cap is around 170 million and shares listed on AIM are only worth around 20 million? Well, look, the first answer to that is the shares are the same. It is a single ISIN. There is no difference between the shares in Poland and on AIM. We did put out an RNS a year ago to highlight the fact that we saw there was no fundamental reason why those share prices should be any different. I think we do events like this to support our profile in all markets, and we have research here. So I think we do all the steps that we should be doing. We like to try and share our views, thoughts, and promote the company in the appropriate way. But I think there is a pricing differential that perhaps, as we've said in the past, is unclear as to what justifies that. A question from Matthew R. Can you confirm the oil and gas price you have realized since year end and through the first quarter? Why don't analysts model in the performance of prices you have achieved? I can't answer why analysts don't model our pricing, other than they won't know what our pricing is actually until we announce it quarter on quarter. All I will say to you is I think you have to look at the pricing achieved in the markets. I think we generally achieve pricing close to Brent. You look at Brent pricing today was $110. I'm not saying that's our realized price, but that's a close proxy. And similarly, BRM, which is the Romanian exchange, it discloses its gas pricing on a day-to-day and on a forward basis, and it's very easy to go onto that and actually look at that. Dutch TTF as well is another proxy. But I think what you're seeing is prices on the BRM at about in a $30 to $40 per MCF range, and all the future strips are pretty resilient as well. Question from Shoaib. What is the company doing to improve the share price? Share price is worse off than over a year ago. Just doesn't add up. Absolutely, couldn't agree more. Look at our results today. Look at the fact we've delivered net income for the first time ever. Look at the fact we've got net cash on the balance sheet and we have no debt. I kind of feel that we are doing a fair number of things that are correct from the perspective of positioning and trying to grow the business by clearing up our balance sheet and investing capital to grow production and to hopefully allow the market to value us as we would expect it to be valued. James S. Many shareholders, including myself, are frustrated with the lack of PR. Why are you not utilizing social media to promote things like compressor installation, pump arriving, etc.? We're doing a session right now. We report with our results, and we report meaningful elements as we would be expected. We fully comply with our disclosure requirements. But like all these things, we're very happy to take on ideas and suggestions. We always look at this, but I think what we want to do is remain disciplined and fully compliant with our disclosure requirements. Matthew R. What production uplift do you expect to achieve from the pump installation in Tunisia? When do you expect to see this kick into revenue? As I said, look, we are entirely dependent on rig mobilizations in the near term as to when we can start that program. I think I will have to. We actually, in our corporate presentation, have an extract of the SGS report that sets out the gross uplift that is certainly modeled by the engineering study in respect of the artificial lift. Stuart, sorry, can you just remind me what W1 SGS think for W1 is?
Yeah, it's of the order of 500 barrels a day.
Net or gross?
That's gross.
Yep.
So net to the company, it's 45% of that.
Yep. Yep. So that's
also some gas as well.
Yes. So that's, yeah, exactly. So look, that is in the corporate presentation. There is an extract from that report that provides additional information around that. Hussein, we're all a little frustrated by the lack of momentum in the share price. Yep. However, it's not unreasonable given that volumes are decreasing and only realized pricing are to thank for the massive increase in turnover. How can you reassure the market that production will pick up in the near term? Thank you. Look, I think we're all frustrated. I think the first thing is, look, we've always tried to explain that in Romania, it's a shallow oil field. Shallow oil fields deplete and production declines, and that is why, as we said in the past, the compression project, put compressor in the field, is there to stabilize production and extend the recoverability within Moffatino. We have a capital program this year that is exactly designed to increase production. Tunisia, I've just said, we're looking at an uplift from the first artificial lift pump in W1. Sorry, we've got other projects in Tunisia as well, and we see that's a success that will then really allow us to then push forward with the artificial lift program in other wells in Sabria, in conjunction with our partner, and in Romania it's exploration. I think we see our steps going forward through the seismic, through the processing, refining our targets, and we'll start off an exploration program in the second half of this year, and that is what we are doing. So that is what our intentions are, to grow production. Pavel, what average production do you expect in 2022? I'm not providing forecasts or guidance. We report on a quarterly basis, and there are analyst notes out there, but we don't provide production guidance. I apologize for that. Michael, on page 9, average production in 2021 was down on 2020. When do you expect average production to get back to 2020 levels? Again, that would be guidance, so I'm afraid I'm not going to answer that. I think it reflects, as we said, the fact that Romanian shallow gas wells, or shallow gas wells in our Romanian concession, decline, and we have to take steps to manage the field. We are embarking on an exploration project If we can tie wells back into the plant to maximize the capacity of the plant, we will do that. And ultimately, if we find new fields, we'll build new gas plants. But that is very much part and parcel of the program and way going forward. Simon C. Share buybacks. Initially, share buybacks went into Treasury. Have these now been cancelled? If not, what is the plan for them? Will there be more buybacks given the low share price? Again, as I said, share buybacks is all driven by appropriate capital allocations. If we feel and we analyze that we're going to get a better return by replacing a pump in Tunisia, then the capital will get allocated in that way. Which I think makes sense. Pavel, is it possible to eliminate windfall tax in Romania? We have a dialogue with the Romanian government on a number of things. It is something that is constantly on our radar, of course. We'll have to see, how that progresses over time. There are lots of arguments around the fact that it hinders investment, certainly changes the investment decision, because when we look at things, we'll look at it and assess the fact there's debate whether or not it's better to put capital deployed into Romania or into Tunisia. But you would hope that I sort of try to say it in a way that doesn't make me sound callous, but the situation in Ukraine, which is clearly not good, as an understatement, it will force governments and countries to rethink their sources of oil and gas, and that may be a defining input for the Romanian government to rethink their position. I think that's all I can really say on that. Adam, given the shareholder value destruction this board has overseen and what appears to be now very generous director remuneration given the size of the company, how can the board justify not rewarding suffering shareholders with some form of dividend? Well, look, I think I'm only going to say, if you sit and you own shares in a company that has just delivered income for the first time in its career, it's delivering cash flow. We have cash, we have an investment program, we've cleaned up our balance sheet, so there is no more debt, and we're no longer paying $8.5 million plus of interest a year for a loan facility. I think there is a difference between how the business is being positioned and the market's reflection of those steps, which actually I think, it's hard to challenge why those are incorrect steps. Our capital is being allocated into growing the business. A number of people have already flagged, what are we doing about production? Well, we are allocating capital to grow production, and that is what we should be doing at this point in time, having stabilized the business and put it on a very good, strong footing to grow it going forward. JPC, are you able to provide update on the arbitration case, timeline, and impact of both positive and negative outcome? No, is the answer. Sorry. It's with the ICC. It's a fairly formulaic process at this point in time. They have a timetable. We are complying with the timetable, and as soon as we have an outcome, we will share that. But it is in process, and it is moving forward. Nick L. If I understand correctly, CapEx is deductible for windfall tax. Is this correct? What are the timelines around this? Does CapEx have to be in the same quarter the windfall tax is paid, or in the same year? If in the same year, I think it's Cal. Well, do you want to jump in?
Yeah, sure. There is a deduction for capital on the windfall tax, but it is essentially capped at 30% of the calculation of the supplemental income. So that's one of the problems with the windfall tax, is its restriction on the payback of capital. And we've had discussions with the Romanian government in the last few weeks, energy security and their dependence on the imports of Russian gas has really brought energy security to the forefront for them, and the need to start increasing domestic production, particularly on the onshore, where you can get quick production up steps in shorter amount of time than they're offshore. And so one of the things that we're talking about is how to allow more of a higher payback of capital on the windfall tax to encourage that money to be reinvested in Romanian onshore production.
Great. Thank you, Cal. Marek B, what's CapEx for 2022? Could you show us the split? Look, again, that's all part of guidance. We're not going to provide that. I think we have capital plans for a number of artificial lift projects in Tunisia, and you know, we're looking to complete the seismic and kick off, you know, a multi-well drilling program in Romania. I think a lot of the outturn for the year will depend on the initial results that we get from both of those ultimately, and the seismic may actually and the first wells may then redetermine other targets that we select. So it will be it is a busy year. It's a lot of capital that we want to deploy. James, surely if you think the share price would be 6p, any price under 3p or more, or even more, is a buyback opportunity. I think, you know, I said before, we assess it in the scale, in the view of all of the other investment opportunities that we have, just not solely in isolation. Andy, will you announce the completion and installation of Tunisia and the upside in production? I think we will, as we always do, announce disclosable events as we need to. And I think, you know, when we, like anything, I think, you know, when we actually see the impact and fully analyze and assess the impact of these opportunities, you know, we will look at how we disclose that. And now that may be in our next, you know, in our half-year results, depending on the timings. But, you know, we will share information as we need to. Nikhil, what are the current recent gas price differentials between Romanian prices and TTF? Cal?
Yeah, they're pretty much they're very similar, follow similar levels and trajectories. In the past, the BRM actually was higher for a longer period of time, 2019, higher than TTF, but it's really converging to similar prices. And as Andrew mentioned, the current BRM prices were around $30 to $40 an MCF.
Nice. Next question. Piotr, hello. What are the plans for Sankrai 1? Well, do we have an idea what went wrong? Stuart, would you like to?
Sure. On Sankrai, we have a couple of ideas of why the well didn't flow on test. And the answers are it can be mechanical, chemical, or relative permeability effects. So in order to figure that out, we require to re-enter the well, reverse the suspension of the well, and we'd have to be trying various techniques in order to address the no flow. What we see just now is it certainly there's gas there, it's suspended. We have the ability to go back, but right now we are focusing on what we think are better capital allocation opportunities in the upcoming exploration and drilling campaign.
Thanks. Dougal, surely a share buyback would be appropriate given the current low market price. I think we've probably covered enough on share buybacks. Nick L. Question: deductibility against windfall tax. I think we've already covered the windfall tax and deductibility of capex. David, I think this Sankrai seems to have been an expensive exploratory effort that didn't work out. How will SERINUS reduce risk and improve exploration successes chances in the future? Are we using better technology? I don't think it was an expensive exploration. Well, I mean, these are actually very low cost, onshore wells. So yes, it didn't. We discovered gas. We couldn't produce it, but in the scale of things, these are not expensive wells. Stuart, do you want to add a little bit?
Yeah, on the seismic program that we've just completed in Romania, we're getting better, more modern data with, for technical folk amongst you, longer offset, which means we can get better definition on the seismic characteristics, which we think will result in high probability of success exploration targets. So that's what we're doing.
James S., could you expand on what you mean by disclosure requirements? If you can't disclose it through social media and it's market sensitive, should there not be an RNS? If it's market sensitive, we always disclose through an RNS. There are market disclosure transparency rules. We comply with those. And if we have market sensitive information, yes, we absolutely share that information to the market. I think we've covered Sankrai. Nick Al, you mentioned potentially, I think we're going to start to wrap up on the questions. I think we're getting a lot of repetition here. You mentioned potentially accelerating installation of further ESPs in Tunisia. What timing do you target for the other ESP installations? What I said is we are looking to bring on a program of artificial lift in Sabria. Now, for us, I think that the key timetabling thing, once we get these going, will be our partner and their decision-making process. And we will have to work with them to move forward. We are working very closely on that, and I think the faster we can install further pumps, the better. But ultimately, I think it will rest on the first artificial lift program, looking and analysing on the outcome of that, and getting our partner comfortable that this is a good upside project to be working on. David M., are any of our Romanian wells suited to hydraulic fracturing or directional drilling, or do they use conventional drilling? Stuart?
Yeah, they're conventional vertical wells. The sands themselves have very good porosity permeability characteristics, so we see no need to enhance that by fracturing.
Great, thank you very much. And
sorry, go ahead, Andrew.
No, I was going to say that I think that then brings us to the conclusion of the Q&As.
Absolutely, and of course, if there are any further questions submitted by investors this morning, the team will have the ability to review those and review all questions and publish responses where appropriate to do so. These will be available on the Investor Meet Company platform. Andrew, perhaps before redirecting investors to provide you with their feedback, which I do know is particularly important to you, could I just ask you for a few closing comments, please?
Yeah, thanks, Paul. Look, I think we've had a good year. We have generated nearly 12.5 million of cash flow. We are benefiting now from our clean balance sheet and the ability to reinvest that capital into the business. I think the core focus for us is going forward. It is to deliver a successful artificial lift program on the W1 well in Sabria, and for that to be the start of an ongoing program of introducing artificial lift in that field. And we have a very exciting phase coming up in Romania as we embark on an exploration phase and ultimately use that to enhance production in that territory as well. So we have a lot to do. We are looking forward to this year, and hopefully the steps we're taking will actually start to deliver the valuations that I think we all collectively see that the business should be attracting. So look, thank you very much for your time, for listening, and wish you well.
That's fantastic. Thank you very much indeed. Thank you all for your presentation updating Investors Day. Can I please ask investors not to close the session? It should be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of SERINUS Energy PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning to you all.